Aloha, YouTube investors. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is January 27th. It is Wednesday, 2021, and my throat is a little raspy and a little off, which happens almost every winter. In the summertime here in Hawaii, it's because of the the volcanic ash that floats over from the Big Island, especially when we don't have a lot of trade winds. So bear with my voice and my throat. I am doing zinc honey lozenges, so maybe that will help things for the next videos that I have coming up. But thank you everybody who has subscribed to the channel and continues to follow my channel and like my videos and subscribe to my videos and my channel. Thank you very much. It does mean a lot to me and I really appreciate it. But if you haven't subscribed, take the time to do so right now, and you can also hit the thumbs up button, like the video, and feel free to share with your family and friends. So we are going to be looking at Tesla here. They just announced their earnings earlier today, after the U.S. stock market closed. But before we get to that, I just wanted to show you my Roth IRA, how it looks right now. I did start this, for those of you who haven't seen my other videos, I did start this in September of 2019. And my total returns is down from yesterday because I did videos on Kimberly-Clark and Starbucks yesterday. But it's still over 24%. And through this whole recession and after the market crashed in March of 2020 and the whole pandemic and everything, it never dropped below 12% total return, which I am surprised about because I am new at this. I just started this in the summer of 2019 when I first started with the Stash app and the Acorns app, and then I moved over to M1 Finance where I had two accounts here, the Roth IRA and the individual. But now my individual account sits with Fidelity. I did open up a Robinhood account before the Fidelity account as an individual one as well. I decided to make this into a growth portfolio. So not a lot of dividend paying companies with this portfolio, where my Roth IRA has a lot of solid Fortune 500 companies. Here you can see it's a little bit more risky. With NEO, I have 6 shares, and my total return is actually really good with them. I wonder if I can show my total return right here. There we go. So my total return, I only have 2 companies where my total return isn't the greatest: Salesforce, ticker symbol CRM, and International Airline Group, ticker symbol ICAGY. But all the others have really good total returns for me. And because I don't have a lot of money, as you can see, I don't own a lot of shares, and I don't really do much with this at all either. So I really try to focus on my Roth IRA to get that $6,000 maximum contribution, because you aren't taxed when you withdraw when you hit retirement age. Once you hit that age to where you can withdraw from your Roth IRA, there's no tax on it. So I rather max that out every single year, hit the $6,000 on my Roth IRA every single year, than try and get big growth. And it's because I'm in my mid-40s. I just turned 45. And so I'm trying to be more diversified and trying to I guess, I don't know if it's careful, cautious, what the word is, but I'm just going to be a little bit more diversified. Maybe as I continue to learn and grow in my investment journey, then I'll do things a little bit differently. But as of right now, I just have the 3 main portfolios, and I have them separated like that. Tesla does sit in my Fidelity account, so my total return with Tesla is over 115%. Other people, their returns are crazy. Some people probably invested in Tesla way back when it was trading around $50 in 2013, 2014, somewhere around there. So their return is probably like 1,000%. I had Seeking Alpha up here just a moment ago to show you what that return would be, and I believe it was over 1,000%, but I don't remember off the top of my head. So I don't even own a half a share, and with Tesla, the growth that they have, you really don't have to own a full share. They did do a stock split, so my average share price is $401, so that's how my return is really nice like this. Previously, my average share price was 440 or so. That was before the stock split when I first got into them around April, I think it was, of 2020. And I didn't even own this much of fractional shares. And by the way, because I don't have a lot of money, I do the majority of my buying on fractional shares, so I am very thankful for these brokerages, Fidelity, M1 Finance, and Robinhood that do fractional shares. I owned like 0.3 something, I think, and I got well over $200 in profit, so I took profit out of that and I invested in the Costco, and I kind of plan on doing the same thing here, but I'm going to wait and see how much more gains I can get, because I would like to add to Lockheed and Martin here. They have been trading low over the last month, and I would like to continue to invest. I really love this company, Lockheed Martin. I have a video coming up about them, if not later on tonight, tomorrow. But I really like this company, so they have a great dividend yield, so I want to put some more into Lockheed Martin. But let's go ahead and look at this website that I use here for a lot of my videos, Alpha Street. They do this graph, they call it Alpha Infograph, where you can see all the numbers broken down for the quarter. So this was, like I said, today, January 27th of 2021, and this is quarter 4 for 2020, and Tesla had record-breaking revenues. You can see here they were not expected to get $10 billion in revenues, but they did. They exceeded it and grew by 46%. Their GAAP net income, $270 million, and their non-GAAP earnings per share and GAAP earnings per share was up as well too. So I believe this article right here is where I read in Yahoo Finance. This is what the numbers were actually expected to be. They brought in $10.7 billion. They were expected to bring in $10.33 billion and $7.4 billion year over year. So their revenue was amazing for this last year for Tesla. This graph gives a breakdown of their different segments here. So you see their automotive sales up 47%, automotive leasing up 24%, energy generation and storage up 72%, and this is a major growing area for Tesla, is the energy area, and services and other 17%. And I say that about the energy side because yes, they sell a lot of cars, and Tesla started out selling a lot of cars, and so I believe a lot of people evaluate them rightfully as a car maker. But they also have the storage, the energy storage places. So when you go to the mall or you go to the grocery store or even at your house, you can put the whole charging thing separated from your electric bill, or not separated from your electric bill, but separated from your main electrical outlet for your house, and charge it through their charging station. So you don't have to pull an extension cord out from the side of your house and plug it into the Tesla. They have a whole system that you buy with the car, and they're also planning on doing solar-powered vehicles as well too, where the roof of the car is the solar panels, and so your car will basically run off of that. And Tesla just has a ton, I mean just a whole ton of other avenues that they want to go as far as renewable energy is concerned. In fact, I saw one video and read a couple other articles about their mega cities, where at one point they might end up being part auto company, part utility company, by just being able to have these generators set up for solar power and renewable energy to help power smaller cities and generate electricity that way for not just their vehicles, but for everybody's houses. Maybe businesses, I'm thinking, will probably go into it first before they, because the U.S. government has these federal guidelines and stuff like that. So it'll probably be local businesses that will be doing it first. But they just have a ton of plans. And Tesla sent a ship into space, and he's very passionate. Elon Musk is very passionate about that as well too, space exploration. So they've got a lot of room to growth and a lot of room to grow. So I see them as a tech company, not really as an auto company, even though they are beating out Ford, General Motors, and Chrysler here in the United States. And as far as market value is concerned, at one time, I believe it's still the case, they were valued more than Toyota, which is the largest car maker in the world. So, side note, I actually love Toyotas. I don't own one, but I do love Toyotas because they last forever. So I do find that pretty impressive. 2020 was also very active for Tesla as well too, as they joined the S&P 500, which also helped their stock price to go up. And people really, when it's tech companies like Tesla and Apple and Google and Amazon, they really ride the news. And so as the stock continues to climb, people will continue to jump on board. And like I said in another video about Tesla when they were joining the S&P 500 last year, expect the stock to go up because hedge funds and ETFs and mutual funds will all start adding Tesla to their S&P 500 portfolios, and that will cause the stock price to go up. And like you can see, it's already trading over $800. That is after a stock split not too long ago. So as far as vehicle numbers are concerned here, I'll zoom in a little bit so you can see these. Sorry if it's not very clear, but you can see quarter four, 180,000 vehicles were delivered. Produced was 179,000, over 179,000. And you can see going all the way back here to 2018 where they were only delivering 90,000, over 90,000 vehicles. And now it's 180. And Elon Musk at one time had said that for 2020 he wanted to deliver 500,000 vehicles. And then the pandemic happened and everything like that, so production was slowed. Some of their plants were closed in California. Elon then said that he's going to open up a plant in Texas, which they've got that up ramping. They also opened up about to open up a new plant in Berlin, Germany, and Shanghai, China. China is a huge EV market, so Tesla has a really good chance to own the Chinese market. They almost have 1 billion people, so if you can own that market, you're going to be making a ton of money for a long, long time, and you as an investor will probably be making a lot as well too. So, but they didn't hit that goal. They actually did just under the 500,000. It was 499,550. So they missed it by about 450 vehicles delivered, but I wouldn't be surprised at all if they hit that in 2021 because of the stay-at-home economy and because you didn't want to get too close to people and stuff like that. More people went out to buy cars, where typically in a recession, the cyclical buying and selling of cars, buying houses and stuff like that goes down. But that was the opposite this time because you wanted to be socially distanced from people, so people went out and bought cars. So no more taking the bus, no more taking the train. Uber, Lyft had issues as well too because people didn't want to get into another stranger's car not knowing what the sanitation process was going to be. So that helped Tesla throughout 2020, but they still didn't get to the 500,000 vehicles that they wanted to get delivered, but I wouldn't be surprised at all if they do that in 2021 here. So some other numbers that you can see here: operating income was up 60%, automotive gross margin 157 basis points, cash and cash equivalents, which I like to see this here, over $19 billion, which it wasn't too long ago in 2019 and 2018 that people were saying, oh, Tesla's probably going to go under, they're not profitable yet, they're drawing down on all these loans. But Elon Musk stuck with his vision, and you can see the amazing turnaround that he's having now. And then, like I mentioned here, supercharger stations worldwide up 41%. So they've got a small monopoly on these supercharger stations. So they might be outside grocery stores, outside your mall. You might have them at your house. I wouldn't even be surprised with the way that we are in a sharing economy with Airbnb and Uber and Lyft. If people with bigger portions of land put these supercharger stations in their front yard or in their driveway and charge people to charge their car while they wait, or when they show up at a baseball game or a football game or a basketball game. Instead of driving to park, you drive to a certain point, you pull into somebody's yard, you charge your Tesla or any other electric vehicle that you have, go to the game, and then come back and unplug your car and go about your way. So a lot of growth still for Tesla. My personal opinion, I plan on holding them for a very, very long time. I will take profits from time to time because I do want to feed my dividend-paying companies. I am more of a dividend investor than I am a growth investor. But if you have some growth, if you're young enough to be heavy growth, in my opinion, it's not too late to start, because I wouldn't be surprised in the next couple of years if they do another stock split, and that might be an 8-for-1 or 9-for-1 or 5-for-1 stock split, and you can get in at you can add to your position at a really, really low price. So one person made a comment, I think it was a couple months ago in November, on one of my videos, that he felt like he was young. He was like 18 years old, and he felt that he'd missed out on Tesla and all these other super growth companies. Well, there'll be others, and Tesla will keep growing. So Don't hesitate and look at the stock price of Tesla and say, well, I missed the boat. No, get in now. It's going to go some more. Kathy Woods has already said that she is projecting Tesla to be trading at $4,000 a share. For a long time, that sounded insane, but Amazon is already trading at over $3,000 a share. So I wouldn't be surprised at all if Tesla got there, especially if they keep hitting all these numbers and they continue to generate amazing revenue as well. So I'll have a couple other videos here for you. Please subscribe to the channel and like the video. Share with your family and friends. Mahalo and aloha, everybody.